As 2021 begins, Bitcoin's rising price has brought forth the usual commentary that has dogged the digital cash project for a decade, that it is little more than a bubble propelled by market manipulation and euphoria. But for those who have spent years studying the phenomenon, the charts are the latest sign of a different reality, that Bitcoin, a genuine monetary invention, is outperforming government money in a natural free market competition. In contrast to how you might see Bitcoin discussed elsewhere, the assertion of this article is that a body of evidence has emerged suggesting the software has created a real, albeit misunderstood, economy, and that this economy is establishing itself, if slowly, within the global monetary order. Indeed, over the coming year, it appears likely that one of the biggest critiques against Bitcoin, that its price is irrational and speculative, will be proven inaccurate by data that better describes it as both cyclical and predictable. Click here to subscribe to the Forbes Crypto Asset and Blockchain Advisor. If this possibility appears surprising at first, we only have to look back at the history of Bitcoin to examine the claim. In the wake of 2017's market euphoria, skeptics and believers were split on a single question: how do we make sense of an asset whose value has ranged from $0 to $20,000? Both groups developed different hypotheses, and as the market cooled, they came to different conclusions for why the price was again declining. To the mainstream, the answer was the simplest model. A rapid increase in new crypto assets and an increase in trading venues, some of dubious legal status, had again fueled a market overly driven by inexperienced investors. Bitcoin enthusiasts took a skeptical stance to that conclusion. After all, there was a new monetary technology to reckon with, one whose economy was just over a decade old. They asked different questions. How was it a price decline occurred again in spite of attention from investors and media? Why did its 2017 chart so resemble the bubble seen in 2013? And why did price declines in 2019 and 2020 stop at levels far higher than observed years earlier? To answer these questions, a new hypothesis emerged: what if Bitcoin's price bubbles are the product of its programming? Understandably, the idea that Bitcoin might be the cause, not the effect, of its price booms and busts may require an initial suspension of disbelief. However, for the purpose of this article, I'd like to invite the reader to do just that as we walk through the basis for this conceit. Let's start with the obvious: Bitcoin has no price. That is to say, from the standpoint of the code, Bitcoins are just finite pieces of data. It is the market of global buyers and sellers for that data that values and applies the price we commonly see quoted. From here, we can see where the idea that speculative manias are the cause of Bitcoin's price increases gets its roots.